Bro, did you even read that weekly market analysis that I sent you? No, man, I didn't have the time. By the time I finish work, by the time I come home, finish all the tasks that I need to do, I definitely didn't have the time for it. What do you mean you didn't have the time, man? What else were you doing besides work? I told you, if you don't change your trading and if you don't do proper analysis that I'm actually giving you for free, you're just gonna keep losing money. Bro, have you seen how many new tweets did Andrew Tate send from jail? And have you seen how many troll posts Elon Musk did, bro? Not to talk about how many videos of how much do you pay for your rent on TikTok came out. I mean, you just can't catch up with all of it. And then of course I had to finish off with reels on YouTube how transgender people are arguing with feminists and arguing with straight people and homosexuals with non-homosexual. I mean, man, it's a mess over there. You need to explore that world as well. You dumb fuck. You're gonna stay poor forever. Hello everyone and welcome back. My name is Dan and in today's video I will be doing a weekly analysis, technical and fundamental, for Nasdaq 100 and Bitcoin. Stay with me throughout the video. There's a lot of interesting happenings, a lot of turning points in the market. So without further ado, let's head to the PC and start as always with Nasdaq 100. This is a Nasdaq 100 weekly chart, and as predicted in the last video, if you haven't watched it, please go back and watch the last video. I said that we are going to have a pullback, okay? And that's exactly what happened. We went through this green line through the key market level, which was at around 12,060, and then we blasted through it and we finally came to this next EMA 20 on weekly chart, which should act as a support at the moment. So guys, as I've already spoken, there's this huge hidden bearish divergence on a weekly chart, and pullback of this kind after 3 big wicks was kind of logical, right? What I would like to see now, I would like to have some support level over here at around 11,850, and if we do manage to hold that area, that's gonna be good. We can still keep up with the bullish momentum on Nasdaq, and we can still do something like a rising flag wedge and come back to this area, maybe retest it, break it or something like that, or go even higher, but we're gonna see what's gonna happen. If however we do not hold this area right over here at around 11,850, that means that the next big support or the logical stop is going to be at 11,500 and the weekly EMA 200. That's been our very strong support for a while, okay? A lot of breaking points were happening around it, and I really do expect us, if we continue with the bearish momentum throughout the next week, that the last level of support is going to be at 11,500. All right, I don't see us going bullish, to be honest. So the first scenario of us bouncing back off of the EMA 20, I don't think that's going to happen. I really do think that we are going to continue with the bearish momentum, and then that we are going to reach our target of 11,500. Those are my predictions on the Nasdaq 100. But let's see now on smaller time frames what can we expect. So on a daily chart, we can actually see right over here. Let me just zoom in. Do we have anything? No, not really. So nothing is happening on the daily chart. Let's zoom in even further on 4 hours. On 4 hours, we do have some happenings. As we can see, we have this bullish divergence, okay, on both MACD and RSI. And this tells us that we actually even might end up bouncing off of the EMA 20 on the weekly chart. And that tells us that we can expect a bullish momentum. So if we actually do that, that means that we're going to retest the EMA 200 on a daily chart, which is going to collide somewhere at around the previous key market level, which is at around 12,060. So expect pullback until there, and then if we manage to break it and reclaim it, then as I've said in the first place, we might continue with the bullish momentum. Nothing should stop us then in that case, again all the way to 12,600. However, more likely scenario is something like retesting the EMA, maybe reclaiming it for a while, come somewhere over here at around 12,200, just to break down again and go down. Again, we're gonna monitor it. If you're a day trader and you want to take some kind of a position, then I would suggest you to keep an eye on this area over here and maybe get some long position. Don't hold it for too long, okay? So get in, get out. Get a quick 100 points or so, maybe even 200, but that's it. Don't stay for too long. Even if you see that the momentum is losing and that the strength is not there, get out even with 30, 50 points or whatever. Let's just zoom in on the 1 hour chart and we should see the same. Yeah, so basically we have a bullish divergence on the MACD. RSI, however, is not giving us anything. This isn't really a bullish divergence. 1 hour chart says yes, we should see kind of a bounce from this area right over here, okay? And as I said, you can take a short position on the long side to somewhere around 12,060 or 70, and then just exit with a quick 100 points, and that will be it. From that point onwards, I would actually turn short and I would continue to short. Okay, so to sum it up, let's go back on the weekly chart. I do expect us to continue with the bearish momentum. We might have a small bounce from the EMA 20, which is going to be at around 11,860, or immediately just to retest this level again. And I do expect some movement like this, retesting it, not breaking it, and coming back down all the way to 11,500. So my final target for Nasdaq in the near future would be somewhere at around EMA 20, 11,500. I might be wrong, but that's just what I see. Okay, let's move on to Bitcoin now. Bitcoin weekly chart, again the same story. Hidden bearish divergence is playing out from both MACD and RSIs. I'm not going to mark it because I marked it in the previous videos. So at the moment, as you can see, it played out perfectly, the bounce from the previous highs. And as I've said, I do not expect it to go over 25k at the moment. And the momentum is actually playing out in bearish way and in bearish scenario. So Bitcoin is currently sitting at around 23,000. It's fighting right over here at around 23,000, which is actually another support area somewhere around here, around 23,000, between 22,500 and 23,000. That's another support area. So we're gonna see what Bitcoin will do. What I expect again for Bitcoin is the same scenario as for Nasdaq. I really think that we're going to see this 21,600 soon, and that we're going to retest this EMA 20 on the weekly chart. Is it going to happen next week? Maybe, maybe not. Let's see what's gonna be. Zoom in further on the daily chart. There is a daily EMA 200 just around the area of 21,700, which I said again, I'm expecting the drop all the way to this area. And if we manage to hold it, it's going to be good. Then we can do a movement like this, come here, retest it, maybe even break it to catch some liquidity. Okay, this is called liquidity grab. When you stop the losses of all people who have the stop losses just below the line over here. So you grab some liquidity just to continue momentum to the upside. And then we go somewhere back around 25,000, retest it, and let's see from there. Now on Bitcoin, there's an interesting thing that we can see, and that is a big bearish divergence. Okay, so this big bearish divergence is actually playing out and just confirming us that the momentum is to the downside, and that we are probably going to see the 21,600 soon. But let's see how it's gonna play out. As I've said, until the end of the week we still have time and we're not in a rush. Probably we're now entering a consolidation zone and area because the news are going down. There's not much happening in the world in general. Volume will probably turn down again, and we're not gonna see these big momentum spikes for a while. And maybe we consolidate in this area around between 21,000 and 25,000, who knows. We're going to see. But if we break 21,600 and then continue momentum to the downside, nothing is gonna stop us till 20k. And then after 20k, we might even revisit 18,000 plus. So that is a very bearish scenario for Bitcoin, right? Let's see, zoom in even further. What do we see here? There's nothing much going on the 4-hour chart. What about 1-hour chart? 1-hour chart, same story, not giving us anything crazy, not giving us any indications of a reversal. You might consider this as a bullish divergence if you want to, but not really, not a big sign. So let's zoom out once again and do a recap. I do expect bearish momentum to continue for Bitcoin. I do expect us to see 21,600, and then I would like to see a pullback from there and retest of 25,000. What I would be doing this week is I would be short oriented once more and just try to scalp Bitcoin off of the EMAs on the daily chart, on a 4-hour chart and 1-hour chart, with the support being 21,600. All right, guys, now let's move on some reports as always and go over them what happened last week. So last week we had on Monday nothing, it was a holiday. On Tuesday there was existing home sales, which is irrelevant basically for us at least. Then on Wednesday we had FOMC meeting minutes where the Fed members were actually discovering and giving us hints what they actually discussed at the FOMC meeting. And what they discussed was that possibility of further rate hikes at around 50 basis points increase, which is actually a bad thing. And we heard from James Bullard and Julia Mester that they are actually in favor of 50 BPS, and all the other members are agreed that they see that inflation is slowing down, but not at the pace that they like it to see. So this meeting just gave us a hint that the Fed is still in a very restrictive zone when it comes to interest rates, and they do not plan on rushing with the pivot, which is good for the economy, right? But it is bad for the current stock market, which means that we most probably will not have a momentum to continue going up, and that we're gonna have a period of going down or even a consolidation. On Thursday, we had members of Fed talking, and it was GDP second report, which came lower than expected. Ouch. The first one surprised, it came out at 3.2%. Then the second one was expected to be at 2.9, but it actually came at 2.7%, which means the economy isn't doing that great as everybody thinks, and we might even end up in a recession. Some people say that we already are in one. I'm one of those who says that we are already in a recession, but whatever. Anyhow, initial jobless claims again came stronger than expected, which again is a bad thing for the economy, because Fed considers tight job market a bad thing, and they will not start reversing the process of quantitative easing until they see jobs go up, jobless claims go up. Basically another bearish sign for the market last week, and market did end up in red last week. And then on Friday we saw a big disappointment, and that was a PCE price index report. As I've said, PCE is a favorite metric of the Fed or Federal Reserve, and it came higher than expected. 4.7 versus 4.3 expected. And what did that tell us? That told us that actually the energy prices and food prices are still going up, and the inflation is not going down, and that the people are paying way more for the food and energy that they should be paying. Okay, so this is a very bearish news for us, because as I've said, Fed prefers this price index over the CPI. And of course, taking this into consideration, I believe that the chances of 50 basis points hike increased substantially. So that means, guys, that in the next FOMC meeting, we might actually see 50 basis point increase. If it happens to be 25 basis points increase, it's going to be very bullish. The stocks are going to explode. But if it happens to be 50 basis points, I believe that we're going to have a turnaround, and that we might even revisit previous lows, and that it's going to be very, very bad for the market. But once we endure that, and once that period of pain goes through, that's when we're going to start ignoring all the other news, and the market will just continue climbing throughout everything. So we're waiting for the period of ending of hiking of interest rates, and once that happens, we should be in the safe zone. Now let's go over some next week's news that are happening. On Monday, we have core durable order goods that is going to affect the markets. Pending home sales, not that much. CB consumer confidence, which is going to tell us is the consumer confidence still high or it decreased. Then we have on Wednesday ISM manufacturing PMI. Then we will have on Thursday, as always, initial jobless claims. We have unit labor costs and non-farm productivity. Those are all job-related reports. Pay attention to them. And then on Friday, we have the ISM non-manufacturing PMI report, as well, a very important report. If it comes, of course, as always, lower than expected, it is going to be quite bearish. So next week, not some huge big reports, right? Not some huge big news, but pay attention to each and every of them and just avoid trading at the wrong timings when the reports come out, because if you're trading at the times when the reports come out, you are just gambling. Okay, now let's move on to some news to see what is happening in the US. JP Morgan's Diamond says US interest rates could hit 6%. Okay, JP Morgan Chase Chief Executive Jamie Dimon expects US interest rates could hit 6%. He said in an interview with CNBC on Thursday, the Federal Reserve quickly caught up out of control inflation and would probably pause interest rates at a little over 5%. But they may need to go higher, Dimon told CNBC. I suspect interest rates may have to go a little bit higher than 5% we're talking about. It could hit 6%, he added. The Fed policy rate is now in range between 4.5 and 4.75%. So Dimon was throwing some bombs, right? He was quite bearish. And with the right, we could actually see Fed going for around 6%. I don't think we will hit 6%, but 5.5 or 5.75 is actually, after all these PCE data and bad inflation report, it's might even possible. And if that happens, as I've spoken in previous videos, we're gonna have a bad recession. It's not going to be a soft landing or a mild one. And especially if they do not reverse it very quickly. If they actually keep those rates for a while, it's going to hurt the economy really bad. It's going to be a very bad recession. So I hope that doesn't happen. I hope that even if they go to 5.7 or 5 or 6 even, I hope they're gonna reverse it very quickly and pivot and just turn the money printer on again. That's what we want to see, because that's where everybody makes money. Them, us. Who cares about inflation? Inflation will never go down again to 2%. Those are just made up numbers, to be honest. I believe that all these numbers that they're giving us, inflation in reality is already 15+% everywhere, if you ask me, in my opinion, right? So all these numbers of 2, 3, 5%, they're just spoon feeding you with some lies. But anyhow, we're going to stick to official reports, and hopefully Dimon is not right about 6% interest rate hikes. Now let's move on to some crypto news, and the crypto news say G20 summit, ban on crypto emerges as possibility as countries see need for regulation. Indian government has been looking for a global consensus on the regulation of crypto, while the Reserve Bank of India has favored a complete ban on these private currencies. India has been actually famous on being quite notorious on taxing and crashing crypto down as much as they can. Basically, I believe tax in India on crypto at the moment is like 50% or something crazy. I'm not sure, don't quote me on this, but they are quite bearish on crypto, right? And they are saying, even the Reserve Bank of India even says that they favor a complete ban, which will not happen. Okay, so they tried banning crypto, they tried doing everything they can to stop it, and they came to a realization that they cannot stop crypto. Okay, crypto is here to stay, and the sooner we accept it, the better it's going to be for all of us. Now, what we need is a regulation, I agree, but not too harsh regulation and not too harsh crackdown like the SEC is doing now, just going after everyone and everything. No, we need a proper regulation that is going to benefit everyone, that is going to benefit us as consumers, and that is going to benefit the industry as a whole. So if we get some positive news from all the countries, and the sooner it happens, the sooner the adoption happens, the sooner we explode, the sooner we go to the moon that everybody's waiting. So it's not going to be Elon Musk that takes us to the moon. It's going to be some shitcoin or altcoin or Ethereum or Bitcoin or something. So that's what we're waiting for. We want to see that kind of moon landing, all right? Anyways, guys, just as a recap, I'm kind of bearish again in the next week on everything, on Bitcoin, on stock market, and on the whole crypto market. However, we might see a small recovery, just a consolidation, but definitely we're not going back to retest the previous local highs, which is for Bitcoin 25,000, and for Nasdaq it was what, 12,600 or something. So I don't think we're gonna see those numbers at the moment, but we might push just to give a little bit of a relief, go a little bit backwards, and then again continue the downwards momentum until we reach the targets that we spoke about. Bitcoin at around 21,500 and Nasdaq at around 11,500 or so. Okay guys, that'll be all for today's video, and as always I'll keep you updated with the latest news and updates for both stock and crypto market, and I really do hope that you're taking advantage of this free education that I'm giving you and making some money on the financial markets. Until the next video, peace out.